Testing 1, 2, 3. Testing 1, 2, 3. Testing 1, 2, 3, 4. Testing. Okay. Good gravy. All right, everyone. That only took me 8 minutes. I do apologize. It's going to get better here. I promise you. We've got audio and video for everyone. And we are going to be talking about U.S. tax compliance and filing here for 2025, just an intro to it. I'm also going to say that if you have some questions, please go ahead and write them into the chat box. And I like that idea of kind of bringing it up as we go along and rather than waiting till the end. So feel free. Okay. So is the presentation material showing up here for everybody? The PowerPoint slides, can we see that? Okay, good. So what we'll start with then is the filings that will be required for this year. And now I'm addressing this mostly to those of you who have set up some new entities in the last year and are going through some filings for the first time in the US, or perhaps you're anticipating getting set up in the US for an investment or a rental property purchase or a corporation, and you'll want to know what's in store for you. There's a lot of stuff involved, and it can seem a little bit overwhelming, which is why you just want to have a good plan of action for ticking the boxes on these things. Those of you who maybe have had your corporations or LLCs or limited partnerships or even just sole proprietor rental properties in place for a while, probably already have your checklists in place, but this will be a good reminder because there are some forms that can jump up and bite you if you aren't on top of it. Okay, so the first thing I'm going to talk about is the beneficial ownership information report filing. And this has been an on again, off again saga with originally the requirement being December 31st that you had to file a BOI report. So in essence, every single person who had an LLC or a corporation or was a beneficial ownership of one in the US had to file a report by December 31st of last year, of 2024, that is, outlining essentially their ownership, providing a passport to the US government, and creating, in essence, a logbook that the IRS could look at in the future to see who owned what. The official reason given for that was that it was an anti-terrorist, anti-money laundering initiative, but it was subject to multiple challenges at court, and then the most recent being a stay that was put in place in January that will extend until March 25th, 2025. So long story short is if you didn't file by now, you won't be penalized, and you may not necessarily have to file depending on the outcome of the court proceedings in March. We've been continuing to go through our queue and filing clients the BOI reports for them, and you may choose to reach out to us to have that done as well if you so choose. Again, not currently a requirement. But these next few things, I've put them in green because these are important non-tax filings that have to be taken care of basically starting now. If you have an entity in the US and you live in Canada, you are required to have a registered agent in the state where you operate, okay? If we set you up, we would have enlisted a registered agent on your behalf. There are various companies that serve as registered agent, and their job is not to act as a mail processor for you and taking all your mailing and sending it to you, although you can hire them to do that additional task. Their job is simply to accept legal documents, typically from the state, have a place where those can be received in person, okay? So if you were being filed with lawsuit papers, if there were state taxes owed, if those kinds of things were coming through the mail, you are required to have a place where those can personally be received. That's your registered agent. You have to renew that every year. If you don't renew the registered agent, they will resign as your registered agent, and you'll be essentially struck from the register in that state. You won't be able to operate. Okay. Annual state reports also have to be filed for several states. Some states don't have them, some states do, but this is not a tax return. We get these notices from clients all the time saying, yeah, I thought you filed our taxes. Here, I got this report. Well, indeed, we filed your taxes, but we like to think of this as a driver's license that every year you got to update with the state. So you have to update your corporate shareholder list. It usually doesn't change. The addresses don't change, but it has to be filed and updated with the state. That's also coming due. And the last thing, an annual franchise tax report. Some states like Texas have it. Ohio has it. Some states don't have it. So again, very critical forms, because each of these comes with penalties if you don't file them. So I definitely recommend that all of you go ahead and get these filed on your own. If you wanted us to, in particular, the registered agent, since we have the contact, we can reach out to them on your behalf. So let us know. Okay. Then your U.S. tax returns, which is typically what we do handle. Those are, if you have a corporation, the deadline is March 15th. If you're filing individual returns, the deadline is April 15th. Both of those can be extended, okay? But you have to file an extension request before the deadline, and the extension will give you an additional 6 months. Now, contractor 1099 forms. This is a very interesting one that a lot of clients don't know about. I'm going to go into this on the next page in a little bit more detail. But this is an important filing to heed, and the IRS is starting to crack down a lot more on these. So more on that in a minute. In Canada, on the Canadian side, now that you own U.S. investments, U.S. properties, investments in limited partnerships, investment in developments, and investments in LPs, REITs, whatever it might be, you now have a filing requirement on your Canadian taxes, okay? The penalties for not disclosing those foreign investments can be pretty steep. So very crucial that you please, if you're doing your own tax return, that you make sure you get those completed, the T1134, 1135. If we're doing it clearly, we need to know. If you haven't already told us that you have certain U.S. investments, but if we're doing your U.S. side, we'll know it as well. Then 5472, 5471 filings. These are important filings. So, and I appreciate this all seems a little overwhelming, but these are just schedules in the tax return, okay? And essentially what these are, 5472, if you are a foreign related party to your corporation, which you are in the U.S., you might have transactions going back and forth between you and your corporation. Maybe you lent money to the corporation. Maybe you were paid dividends. Maybe you were paid a salary. In any case, you have to report that to the IRS on a 5472 form, okay? For those of you on here who are actually U.S. citizens or U.S. residents for tax purposes, you might have what's called a 5471 filing, which is the reverse of the 5472. Instead of reporting from U.S. to foreign, you're reporting your Canadian corporation, if you have one, back to the U.S., okay? And then the last thing I've got on the list here is FBAR filings. Essentially what that is, if you are a U.S. citizen or a U.S. resident for tax purposes, individuals I'm talking about here, you have to disclose all your bank accounts, pension funds, et cetera, in an FBAR file. All right. So that's the short list of all the schedules that are important, I think. There are a few more that I haven't gone into here simply because they come as a matter of rote as the tax returns are prepared. But some of these on here are things that you're responsible for or need to direct us as a firm to complete on your behalf, okay? Now, 1099 forms, as I said. So if you made a payment during the calendar year as a small business or self-employed individual, you're probably required to file this form. This will come into play if you own a rental property and you hired some contractors to do work on that rental property, you have to issue them a 1099 form. The threshold, if you had some independent contractors, maybe you hired some cleaners to come in and clean your Airbnb, you have to issue those people a 1099 form. The threshold, okay, is $600. So any amounts below $600 total for the year that you might have paid an individual to do work doesn't have to be reported on a 1099 form. But amounts over and above that will have to be reported. And this is a crucial date. The deadline is January 31st. So it's 3 weeks away. The failure to file by January 31st, penalties range from $60 up to $600 per form. So clearly, we want to make sure we're on top of this, all right? And as I said, it's something that a lot of people have simply not regarded as important in the past, but we're seeing the IRS crack down on this a lot more. And there is an extension available. So we can certainly, if you're not ready to file that, we can certainly file an extension for you. Now, the point I made at the end here, the W-9 form, is what we need to be able to file the 1099 form for you. So if you are indeed hiring a contractor to come do work at your place, okay, if you're hiring a cleaner, if you're hiring a plumber, if you're hiring anyone, you should be giving them a W-9 form to fill out before you even do any work for you. And they shouldn't in any way take it as an affront or be surprised by it. It's the normal course of business for independent contractors, all right? But that W-9 form is the information you need to report to the IRS, along with the amount of money you end up paying them. But it'll have their name, social security number or EIN number, and their address, okay? So that W-9 form, let's make that a part of your business operations now going forward when you hire contractors to give that to them. You don't give 1099s to corporations. So if you hired a big corporation to come do landscaping and it costs $35,000, well, you're not going to give them a 1099 form. This is meant as a tracking mechanism for the IRS to track essentially that underground economy, who's working here and there. And that's the kind of individual or business you will give this this form to, okay? And the amount, $600, is not per occurrence. It's the total amount paid to that individual or small business in the year. So if you gave them 300 this week and 680 next week, well, you have to have, 300 this week and 380 next week. Well, you've surpassed 600 for the year. You have to report that on a 1099 form, okay? So that's one of the forms that's most imminent, and many of you probably are thinking to yourselves, okay, I got to get that filed. Well, maybe you want to reach out to us to get an extension in place. Please do so soon. We're 2 weeks to go here. So if I were making a plan of action, we're going to go into a couple of these things later because you want to know what kind of documents, et cetera, are necessary. But if I was making a plan of action for my small business in the U.S. or my corporation, my rental property operation, I would go about it this way. I would tick off the first few things that are easy to complete, right? Renew that registered agent, file that annual state report, because all that's required on there is update my address and pay the government fee. And yes, the government always wants a fee. It depends what state you're in. The worst state is the state of California for this. It's over $1,000, the annual report fee that you pay the state. Some states are less, some are like $80, $75, but the fee has to be paid, file the report. And the franchise tax filing, have that report as well. So at least you know all those necessary things to keep your company in good standing have been done. That's complete. I would file the BOI report. I'll leave that to you whether you want to do it or not, knowing that there's a stay. But just being able to check that off the list seems like a good thing to me. Lydia asked, if more than 3 contractors for $499 each, is it still required to file? No. So it's per individual contractor, right? If you have 12 contractors and you paid them all $500, you don't have to file any 1099 forms. But if you paid a single one of them $640, well, that one has to get the 1099. The other 11 don't need to get the 1099. Okay. So next on my list, the plan of action, I'd request the 1099 filing extension. if I wasn't ready. If I was ready, I'd get the W-9 form and other relevant info over to my accountant to file those. Then I'd start getting the tax filing information together. And I'm going to go over what we need in a moment here. Okay. But the requisite source documents, tell you what those are in a moment. I'd make sure I finalized my income statement for my operations for the year and the balance sheet. Or I'd make sure I had a bookkeeper available to, excuse me, go through my documents and prepare those forms. Good gravy. Okay. If I knew there were going to be some delays, and certain, a lot of companies and a lot of our clients have investments in other projects. They have investments in LPs. They have investments in REITs. You are sometimes dependent on somebody else. Just like in Canada, we're waiting for a slip from a bank or whoever to come. So you may be waiting for important information to come from those investments, and you're running up against that March 15th deadline. Well, probably a good idea to file that extension so that you get the additional 6 months and don't face any U.S. filing penalties. And then after filing the U.S. returns, ideally, doesn't always work out because indeed you may have to file some extensions, but you typically want to wait till you file your U.S. return before you file your Canadian-based returns, okay? And the reason for that is there may be some opportunities, there may be some required items to report, but there also may be some opportunities to share some losses from one side of the border to the other, typically flowing up from your U.S. properties, where there are opportunities, especially in the early years, to get large losses on things like depreciation, cost segregation studies, etc. Okay, so if we go through the source documents now, so these are the things, and we routinely have a tax filing checklist, and we will give this out to everyone, okay? But this is for you now to start thinking about what you need to assemble. And moreover, one of the points I like to make to people is that the admin side of the business is what can bring you to your knees. And not staying on top of this, it can be like, I know myself, if I go through my bank statement from last month, sometimes there are charges on there that I have no idea what they are, and I'm convinced someone else must have made that charge until I call the bank and figure out, oh yes, I forgot I bought that at Sport Check. That's correct. But can you imagine if you had to go back 8 months or 11 months or a year and try to figure out what some of those transactions are? That really can bring you to your knees. So staying on top of the admin side, ideally with the help of software. Okay, the software is out there, and many of you are in the startup phase of your business, and QuickBooks, the $50 monthly fee may be prohibitive to have it in electronic format. I understand that totally. We want to be cost efficacious about this. The ultimate goal is to help you make money. There are free software programs out there. There are also templates available, and I'm going to share a template with you here in a moment that you can use if you want to do Excel-based, okay, for keeping track of these things. But if you've grown to 2 properties and 4 properties, or if you've grown to 8 different LP investments, if you've grown to whatever your project might be that's grown significantly, and you're finding lots of transactions coming in, it's time, one, to get a cloud-based bookkeeping software, and also a professional bookkeeper to provide the reconciliations for an hour or 2 a month that might cost you $100 is well worth it in the end, because as I said, what you are actually missing out on in terms of deductions and lost opportunities to save taxes is significant, I find, if you're trying to remember what happened 11 years or 11 months prior. So we need the bank statement, closing bank statement for your corporation or LLC or what have you, PDF document of that. We need a PDF document of your mortgage statements. Again, for every single property. All of us, by the way, should have a different bank account for every property, Okay, I know some of you don't do that, but you should have a dedicated bank account for property A, dedicated property B bank account, and so on and so forth. Okay, that's the best way to reconcile traceability, all those good things, as well as liability protection. Okay. Completed W-9 forms just referenced. The lawyer's statement, the purchase statements. If you bought or sold a property in 2024, we need the source documents for that. Okay, very critical to be able to report the correct amounts for depreciation and capital assets on the balance sheet and get you the appropriate deduction. So please provide those. You may have to reach out to your lawyer. You may need to go through a little bit of work to contact them in the US, but please get that information. W-2 and K-1 slips from investment holdings. Again, this is the one that often gets delayed. Your own corporation, perhaps, or partnership, perhaps you have investors. You will be required to submit K-1 slips to them, and they'll probably be calling you and saying, "Where's my slip? I need it." Well, please also, if you're waiting for a slip, reach out to the promoter of the investment you're in and request those slips in a expedited fashion. Okay, it does, believe me, as an accountant on the other end of it, you do feel it when somebody calls and says, "My client is waiting for that K-1 slip." A little bit of extra, urgency is always helpful. So, if we didn't form your entities, then we need the formation documents. If you're operating Airbnb, it's great that you're keeping your own records, but 9 times out of 10, your records do not match Airbnb's records. Moreover, their withholding records are what we have to report, the actual form, on the return we're completing, whether it be a corporate tax return, whether it be a partnership return, LLC return, whatever it might be, personal tax return. So you need your slip from Airbnb, okay? Or if there's another third party you're using, they'll have a similar type of slip. Again, the income statement and all IRS correspondence. So let me just see if I can get this open here. So in terms of an income statement, this is what we have as a template. If you'd like to have this, okay, then please let me know and I'll send it out to you. I try to emphasize to people that this is for the infancy stages only, because you will ultimately get too many transactions happen to be able to accurately reconcile them. But this is a good form for your first year especially, okay? And this form needs to be completed for every single property. You can add additional expense categories in there. You can do any number of revisions as you see fit. But the Excel document that I would provide to you actually has the transactions broken out monthly. So whatever's happening in January, if you're on top of it, you can go in and just make the ledger entry in January. You spent $95 at Staples for office supplies. You make that entry and it populates this main summary page, okay? Do Canada and US follow same accounting principles? Yes, we're following the same for your type of business. For the small business, for small corporations that are not public reporting, we're all following an accrual basis. IFRS is included in that, so we're all following the same accounting principles. There are some differences in treatment of things. For instance, depreciation has to be taken in the US. I'm going to tell you about that in a second. Doesn't have to be taken in Canada, okay? But we'll get to that one in a moment. So some tax treatment changes, but accounting principles remain the same. So this is the form. I think it's very helpful for you if you're not using an accounting software. If you're using an accounting software, this is not needed, and it's rudimentary. Your accounting software provides much better reconciling and double entry accounting. All right, so if I go back to my presentation, actually, while I'm here, let me see. Let's go to property tracking sheet, because this is something else that we'd like you to fill out each year, or at least in your first year with us as a client. Okay. This allows us to see what properties you have. Did you do any capital expenditures on it? Who other owners of it might be? A lot of times there are joint ventures on the projects you're invested in. That's critical information for us to know, so that we're not reporting 100% of the income on your corporate or personal or LLC tax return. Okay. So this form, again, this is part of our tax package that will go out. The checklist, property tracking sheet will go out. It sounds like people are interested in getting that rental income and expense template. So I'll provide that one as well. By the way, what people always ask about is, what expenses can I deduct? So here's a summary list here that provides the overarching categories. All right. But the general premise is that it must have been incurred for the purpose of earning income, and it must be reasonable. If you follow those two premises, you can deduct a lot more than you think you can. Okay. Your trips to visit Arizona property, the airfare, the hotels, the meals while you're there, all of that is tax deductible. It's all legitimate business expenses if your corporation is in the business of real estate. Okay. If you own that property personally, or you're thinking of investing personally, none of those expenses are deductible. So there's the main difference between using a business structure like a corporation and doing things in your personal name, which is a corporation in the business of real estate can deduct those kinds of things. And indeed, clients will work hard to, a lot of times, arrange their personal travel around business travel and visiting properties and potential properties for that very reason. Perfectly legitimate to do so, breaking out the personal and the business components, right? And making sure you have backup for doing things like that. So what would be backup for visiting or for deducting business travel? Well, certainly, besides the source documents, travel tickets, credit card receipts, etc., you would want copies of the listings that you viewed if you were in, let's say, Scottsdale to look at a property or properties. You want business correspondence with agents that you might have talked to or helped you see those listings. You want correspondence with mortgage brokers, if possible, or mortgage agents, where you asked for approval for loans because you were anticipating the purchase of property. So all of these kinds of things are the backup that you're looking for, okay, when you look to deduct things like business travel. All right. So again, I can provide this form to you if you like. It's meant as a general guide. There are a lot more categories in this, but a lot of things on this might be of interest to you. So back to my presentation. So what can I deduct? We did that one. So, and I like to reference this too, because people ask me all the time, do I need the receipts for things that I've purchased or expenses I've incurred for the business? And it's a good idea for sure. Now this is, excuse me, this is a Canadian tax court ruling, but the same premise applies in the US. In Canada, nowhere in the Income Tax Act does it say you need a receipt to be able to deduct something for business purposes. But anytime you talk to an auditor, the auditor will say, well, you don't have a receipt, you can't deduct it. In fact, he or she is completely wrong. The Tax Court of Canada, Benjamin versus the Queen, 2006, the ruling is that documentary evidence is not required unless the court or unless the statute, the Tax Act specifically requires it. Okay, the wording is Oh, the court cannot avoid its responsibility by essentially telling a taxpayer, it doesn't matter how credible your testimony is. If you don't have a piece of paper, you must lose. And that's essentially, I've been in tax court before, and that's essentially what you're what it comes down to with the judge is your credibility. You know, if you have an expenditure for on your tax return for let's say gas fuel receipts or for fuel that total $800, and you don't necessarily have the actual receipts, but you have perhaps a credit card statement, and you also have your property address showing that it's 88 kilometers, and you can show that you would have had to travel there once a month to collect rent. Well, that kind of information adds to your credibility. So while we want you to keep receipts, we'd love for you to keep them electronically using a software such as QuickBooks or Dext or Receipt Bank, whatever is most efficient for you. If you don't have the receipt, don't think that you can't make the deduction. Okay. I like to use this example because it was a great success story. We just had a ruling from appeals where one of our clients inherited some properties from a deceased individual in 2018. Okay. And CRA now in 2022, it was in 2022 that it happened, was questioning the capital expenditures on that property that had been made several years prior by the deceased individual. So what had happened was the person who inherited these from their family member was at wit's end trying to figure out how the heck can I prove to CRA that these capital expenditures were made, improvements, a new roof, et cetera, when I don't have access to the receipts. I can't ask who was used, et cetera. So what we advised, I thought it might be a bit of a long shot, but I thought, well, why don't you go to the property and take pictures of everything that it was claimed as a capital expenditure, okay? And then we'll get a professional opinion about when that was done based on what it looked like at that time and how much it would have cost. And it aligned with it, as it happened, the capital expenditures or capital improvements that were claimed on the tax return that were being questioned. And what we were trying to demonstrate was credibility, and that the fact that there were no receipts, knowing that a receipt is not required, we thought this would really show that demonstrate the capital expenditures were made, and that the amount of work and effort we put into showing it would demonstrate the credibility. Well, we had a wonderful letter arrive just before Christmas. The appeals officer allowed 100% of the capital expenditures, and I thought that was really terrific. In a time when CRA is becoming so difficult to deal with, so inflexible, I thought, this is a step in the right direction, and moreover, an important learning opportunity going forward for me, for our clients, for all of you, to note the importance of credibility. Okay, that's my spiel on receipts. Same thing about logbooks. As many of you know, I was a criminal investigator auditor at CRA for 14 years. And when I audited businesses and I said, please provide the logbook for that vehicle that you're deducting the expenses on, in 14 years, not a single person provided the logbook to me at that time. So what they always said was, oh yeah, I got the logbook. I just got to go get it. Somebody else has it. My accountant, my sister-in-law, my bookkeeper, I will get it. And lo and behold, I know somebody went back and spent all night looking at their Outlook calendar and created a wonderful logbook and brought it back. And most auditors, when the logbook came, simply opened the logbook and closed it and handed it back, because honestly, how can you do much with trying to figure out if someone traveled 48 kilometers 3 years ago or 42 kilometers and so on and so forth. So a reasonability test comes in, yes, but the court case that I'm referencing here was the judge said, you don't even need a logbook, okay? Or if there is a logbook, the judge said in this case, where there is a logbook, CRA cannot tell the taxpayer how they travel to and from places. In other words, just because it's 8 kilometers from here to my property, and I write down that it took me 12 kilometers, you can't say I'm only giving you 8 because you didn't take a straight line. So I thought this was interesting. It's going back again, 16 years. But the logbook problem, you will require a logbook if you are claiming business expenditures for travel, for vehicle. At some point in the future, you're reviewed, you're going to have to provide a logbook. But now you know the background and you know how little I think you need to stress about it. You will have to create something when the time comes. All right, that's my spiel about the logbook. That's on the CRA side, as I said. In 10 years of practice here on the US side, as we've done US tax returns, and I'm going to touch wood loud here, but the IRS has never asked to see vehicle support or documentation for vehicle expenditures. So for those of you who were at our November workshop or saw it online, you'll recall Chris from SafeBridge, Chris Karam at SafeBridge, talked about the fact that there are somewhere in the neighborhood of 80,000 auditors in Canada now for 35 million people, and only 60,000 auditors in the US for 350 million people. And now we can see a bit of the difference in how compliance is treated and scrutiny and so on and so forth. Maybe not that many in Canada anymore, as many of you have known or heard. A lot of people are getting laid off there. So good or bad, that's certainly a reduction in the workforce at CRA is coming. So a note about ITIN numbers. People ask all the time, oh, can you get my ITIN for me? And I say, well, we can help you get it for sure, but getting an ITIN is a process. And it's a process that's going to take you 4 to 6 months, okay? I have on occasion gone into an IRS office in Boston, for instance, to personally deliver ITIN applications. It expedites the process a little bit, but you are still in that 4 to 6 month range on average. And so if you are thinking that you want an ITIN, maybe you want to get a US credit card, for instance, right? A US situated credit card. Maybe you own a US property individually in your personal name. It's a rental property. You're going to need an ITIN, okay? If you are thinking of moving to the US, an ITIN is helpful if you want US credit. For any of these reasons, if you have US investments in your personal name, you need an ITIN. So the process essentially starts with you. You have to go to the passport office and get a copy of your passport and get it certified by the passport office, okay? With that, we can prepare the SS4 application for the ITIN number. We also have to prepare a tax return for you. The IRS is only accepting ITIN applications when you've also submitted a tax return. So we have to submit a tax return. That tax return may be nil because maybe you had nothing happening in the year, or maybe it's your first year of owning a property, so there's something on there. But the tax return, the SS4 form, and the certified copy of your passport, and that all gets submitted to the IRS in paper format. Can't be submitted electronically. Our fee to complete that is $575 US, just so there's no surprises, but that is the process, okay? If you're looking to get an EIN number because your company doesn't have one, well, that's a lot quicker, and all these other steps are not needed, all right? But you don't have to file tax in the US, even if you only pay yourself through your Canadian company. So Corey asks, don't you have to file tax in the US, even if you only pay yourself through your Canadian company? So you have to file tax in the US if you have US source income that is not specifically exempted under treaty. If you have a Canadian company that's operating in the US and generating revenue in the US, you may have a US filing obligation for that Canadian company. Okay. If you're doing e-commerce, for instance, you might not have a US filing obligation. But if you have a US investment in a LP, you absolutely have to file in the US for your Canadian company. Okay. So it depends what the activity is and the type of income being earned. If you own, let's say you own certain US equities, either in a brokerage account or through an RSP, a lot of times you'll get that form at the end of the year showing US withholding taxes. Okay. Those forms are issued under the Canada-US tax treaty, and that withholding tax that's been taken on that form is your final obligation to the US. There's no additional tax required, no additional filing required. You've fulfilled your obligation. Okay. But other types of income may be subject to tax filing, require you to file a tax return. So I've sped through a lot here. It was meant to be an overview. A few of the tips that I have that I could just think of off the top of my head, that travel I mentioned already. Keep the receipts if you can. If you, is this being recorded for later? It should be. Yeah, I think it should be recorded, so it'll be available later. The U.S. corporate tax rate is 21%. So this is the tip, is to remember what the U.S. tax rate is for corporations. And that, if you are not yet in the situation where you've purchased a property, you're still anticipating that event to occur, or you're wondering what it will look like, return on investment wise, etc. We're proponents of using the U.S. Corp because you can scale it up in the U.S. at that 21% tax rate, which is lower than in Canada. Okay, rental income in Canada is taxed higher than that. So you have an opportunity to scale your U.S. holdings and on lightly taxed dollars. If you are indeed already operating and you're trying to anticipate how much tax you'll have to pay at the end of the year on your profits, or maybe you're thinking about selling a property, the tax rate is 21%. Okay. Again, a reminder, because I had someone the other day saying, yeah, I set up an LLC for myself so I could start investing in the US. Well, that's a problem unless you in some way layer that LLC in a structure that insulates it from Canadian tax, because LLCs are not recognized as flow-throughs in Canada. And it doesn't matter if you do a check the box election to call the LLC a corporation. Canada still regards it as a entity to be taxed in Canada without, and this is the critical part, this is why the double taxation comes in. So if you individually invest in something in the US, you file taxes in the US, you pay tax in the US, you come back to Canada, you report the income, but you get a credit for what you paid in the US, okay? That eliminates the double taxation. That's the Canada-US tax treaty at work. If you have a US corporation, the US corporation pays tax. There's no tax paid in Canada by the US corporation. If it's been set up correctly, the way we encourage clients to set it up, layered beneath a Canadian corp, you can then pay a tax-free dividend from Canada back into from the US back into Canada, essentially getting the money back to Canada, taxed at only 21%. A 5% tax treaty tax kicks in, but overall 26% overall tax is still kicked in. No double taxation. If there's an LLC, the LLC pays tax in the US, okay? You then have to report that income in Canada and pay tax again, and you are not permitted to deduct the tax that was already paid in the US. So you pay double taxation. That's why you need an LLC in some way contained in a structure that insulates it from Canadian tax. Okay. Layered Canadian and US Corp. So this is an important factor that, again, is being more scrutinized lately as the IRS especially cracks down on foreign investors, or I wouldn't say cracks down, but increases their scrutiny of foreign investors. And that is, if you lend money to your U.S. corporation, okay, there is a required interest to be paid, all right? Your U.S. corporation is required to pay interest to your Canadian corp. It cannot receive a tax-free loan from the Canadian corp. Now, a lot of times that will be considered capital, a capital account item, and therefore you get around the interest requirement. But it is much better for tax purposes, honestly, if you call that a loan and you charge the nominal rate of the day, whatever it might be, 3%, okay, than it is to call it a capital, owner capital, all right? So something to keep in mind. Israel asks, can I pay my child a salary through my corporation in Canada? You can absolutely pay anybody you want a salary as long as it's reasonable remuneration for reasonable contribution. That's the rule, okay? You can hire your children, but you can't pay your child $150,000 a year to work 1 day a week stuffing envelopes. That is not reasonable remuneration for reasonable contribution. Same, by the way, applies for your spouse or any other non-arm's length individual or arm's length individual, non-arm's length individual. All right. Losses from LPs, losses from personally held properties are flow through. You report them on your personal tax. They reduce other taxes payable. Losses from corps are not flow through. You can't reduce your personal income with those corporate losses. You can carry them forward and apply to future gains to reduce taxes. Or, and this is why we like to get your information sooner rather than later in the year, because there may be some planning opportunities on the Canadian side. If you have a Canadian company that's generated some revenue, well, perhaps there's some sharing of management resources or other types of resources that can necessitate some invoicing between companies. All right. Again, everything we want to do is reasonable payment for the reasonable resource or contribution. Okay. So whatever it might be, there's an opportunity to potentially investigate. There may be a possibility to investigate that opportunity and reduce taxes payable on one side or the other. All right. Keep in mind, you have to file a U.S. tax return if you're a corporation or an LLC or a partnership, even if you had no activity, even if nothing happened in the year, you still must file a corporate tax return, LLC tax return, partnership return. Okay. That's unlike in Canada. We do have a filing requirement in Canada, but you're not penalized. There's no fines for failing to file. In the U.S., indeed, there are fines if you fail to file tax returns. Where else are we? You must claim depreciation on a U.S. property. We, as a matter of rule, always claim depreciation in Canada. In Canada, it's called CCA, capital cost allowance. But in the U.S., the depreciation rules say, hey, if you didn't claim depreciation for that property for the last 10 years, we don't care. When you sell it today, we're going to tax you as though you claimed depreciation for the last 10 years. In other words, you're going to pay tax on monies you didn't get for 10 years. So you might as well get those monies or get those deductions all along the way, rather than say, I don't think I should claim depreciation. So it's interesting. It's an interesting difference between Canada and the US in that respect. But as I said, we, as a matter of rule, undertake to always claim depreciation in Canada. There's, in our view, if you are in the business of real estate, you can create a loss with that depreciation that at worst gets carried forward, but at best can be used to offset other types of income in the year. The rule of accounting is defer taxes payable as long as possible. Use your credits today, and that is one way to do it. Okay. Are tax return deadlines universal in U.S. versus based on corp fiscal year end in Canada? So the tax return in the U.S. is due 3 months after year end, or by the 15th of the third month after your year end. So if your year end is July, where's that take us? August, September, it's due by October 15th. Most year ends, certainly the ones that we set up, we stress it's a good idea to have a December 31st year end. So that takes you January, February, March 15th. Okay. Canada's tax rules are your tax return for your corporation in Canada is due 6 months after year end, but interest accrues either 2 months if you're a passive activity or 3 months if you're an active business after year end if you haven't made your payments. But the tax return isn't due for 6 months. Okay. And then if you are, the last point I'll make here is if you're planning to sell a property in 2025, there may be significant withholding taxes at play here that you can mitigate if you do some pre-planning. By pre-planning, I mean filing the necessary forms to get a clearance certificate ahead of time to reduce those withholding taxes to just being applied on your profit. The way withholding taxes work under the Foreign Investment and Real Property Tax Act, if you sell, that's called FIRPTA, if you sell a property in the US and you are a foreign resident, owner of that property, you sell it, the buyer is required to withhold 25% of the gross sale price, okay? If it's a $500,000 property, 25% of that would be $125,000 that has to be withheld and submitted to the IRS. You'll appreciate that if you sold a property today, January 15th, and the IRS withheld $125,000 on a $500,000 property, and you didn't even have anywhere near that in profit from the deal, maybe you bought it last year for $4 and sold it for $5, your taxes should only be about $10,000, but the IRS has $125,000, you have to wait all the way until next April to get your money back, okay? The excess of the 25% over what it should have been, the profit tax of about 10 grand. With the right, and typically I tell people, you know, I know it's hard to foresee it, but if you know within the next 3 months you're going to be selling a property, start the process of getting your clearance certificate ahead of time. We can file the requisite forms so that when the property is sold, the buyer only has to withhold the amount that you showed the IRS as profit or the tax on that, and you get to keep the rest, okay? And you don't have to wait many, many, many months to get the refund you're entitled to. Okay. Is it tax effective for a U.S. person to own cash value life insurance in Canada? You'd have to, Israel, I don't know the answer to that one because I'm not an insurance expert in any way. So I'm not sure what cash value life insurance is. As I mentioned at our November workshop, invited out Chris Karam from SafeBridge because he has the answers on all things insurance and how they relate to corporate tax planning. I highly encourage you to reach out to Chris, get answers to that question and indeed any others you have related to insurance. Okay. So that really is it, folks. That's the high level. You know, you've got some checklists coming that you can work through. You've got an idea of what you've got to assemble. And you've got an idea, at least in your mind, that there are some important filings that are due really this month. Okay. And I'm going to be on vacation for 1 week, starting on Friday. But my calendar is always available on our client portal. All right. So please go in that calendar. Oh, one last thing, go on the calendar, book a time to speak with me. But I am such a stupid here. I completely forgot to introduce, she's not on the screen or on the call, but our US CPA, Selena Cheng, is on this, watching here as we go through this. And I want to encourage everybody to reach out to me and to Selena to get some of your US filings questions answered and indeed addressed. Okay. But it's Selena, SELINA @realfile.ca. I will send out this PowerPoint to all the people on this call. I will attach the resource materials. And I'll also put Selena's email in that as well. But Selena joined our team this past year. She replaced Angel, who's moved on to other pastures. Okay, but Selena is our U.S. CPA. She's going to be heavily involved, clearly, in the U.S. filings come tax season. Let's see what we've got here. Sorry, I have an appointment next week with your team about you taking on my accounting for my C Corp and my Canadian Corp that owns my C Corp in the USA. Fantastic, Corey. That's exactly, we'll be able to take care of that for sure. And we look forward to that. And everyone else, please do start reaching out. If you know you have a 1099 filing, I will be monitoring my email. And if you say you have a 1099 filing or you think you'll have to do that because you had some contractors this past year, well, send me an email and I will get Selena to make sure she gets that 1099 filing extension filed for you. Okay. I think our fee is about $45 or something like that. So it's not a lot, but at least you know you're not going to run into any late filing penalties. Okay. I think a couple questions about how you reach me. Well, that's Dave at realfile.ca for those of you who are on here as guests. That's wonderful to see you. Thank you. And as I said, if you've registered for this, your email is in the portal here. So I'm going to share all this material with all of you, and you will then have my email address. Please also feel free to call our office. Pooja, our admin, can handle your questions. The last thing I'll say is use my calendar. Emails are very difficult, especially as we get in January, February. I know I'll come back from vacation. There'll be 800 emails. So I really want to make sure I'm talking to everybody when you need support. Use my calendar, use Alan's calendar, reach out to Selena, however you need to get a hold of us, but we want to be of support to you. Okay. I think that's it. So somebody asked S Corp or C Corp. Well, Canadians can't have S Corp. So if you're Canadian, you can only own a C Corp. That's it, folks. Thank you for joining me. Happy New Year to everyone. And I look forward to being of service to you this tax season. Good night.